So you've got this amazing idea for a business, right? But then you start thinking about the money side of things, and it all gets a little intimidating. Well, you're definitely not alone. In this explainer, we are going to crack the code on the essential numbers every single founder needs to know to turn that awesome idea into a business that actually works. Okay, let's just dive right in with a classic problem. Picture this. You own a food truck. You've got this choice to make. Do you use these incredible, high-quality ingredients that your customers will love, but they cost more? Or do you go with the cheaper stuff to fatten up your profits? On the surface, it seems like a simple trade-off, but you know what? The real answer is hidden somewhere in the numbers. Yeah, and before we can even begin to solve that food truck problem, we have to get our heads around this one single truth. Seriously. Trying to run a business without knowing your numbers is kind of like trying to play basketball but refusing to look at the scoreboard. You might be running around and working hard, but you have absolutely no idea if you're actually winning the game. So how do we build that scoreboard? How do we know if we're winning? Well, it all comes down to two key tools that every founder has got to have in their toolkit, and those are accounting and finance. Now, I know they sound kind of similar, but they actually play two very different and equally critical roles. Let's just stick with that sports analogy for a second. Think of accounting as the official scorekeeper. It's sitting on the sidelines, meticulously writing down every single thing that happens, every point scored, every penalty. It gives you a perfect, factual history of the game so far. Finance, though, that's your head coach. The coach looks at that scoreboard, at that history, and says, okay, team, based on what's happened, here's our winning strategy for the next quarter. So let's zoom in a little on accounting. Its entire job, its only job really, is to create a perfect, totally accurate record of what your company has already done. We're talking every single transaction, every dollar that came in, every dollar that went out. It's all about getting the history right. And that's where finance comes in. It takes that perfect historical record that accounting made, and it flips the script, looking toward the future. It uses all that data to ask the really big questions like, okay, where are we going? How are we going to grow? What's our game plan to stay profitable? It's the strategic, forward-looking part of the whole thing. Okay, so how did these two things, accounting and finance, actually talk to you, the founder? Well, they do it with something called financial statements. The easiest way to think about these is like your business's official report card. It tells you the complete story of how it's been performing. Now, there are three main parts to this report card. And while they're all important, for a new founder just starting out, there is one that you absolutely have to master first. It's the one that answers the most fundamental question you can ask. Are we actually making any money? And that one essential report is called the profit and loss statement, or as you'll hear all the time, the P&L. Put simply, it's just a summary of all the money you brought in compared to all the money you spent over a specific time, like a month or a year. It tells that super straightforward story of your profitability. So how does this thing actually work? How do you read this business report card and figure out if you've won or lost the money game? Let's break it down. We're going to follow the money from your very first sale all the way down to your final profit. I want you to think of it like a simple subtraction problem, just with a few steps. You start way up at the top with every single dollar you earned. Then, step by step, you subtract the different kinds of costs until you get all the way down to the very end, the famous bottom line. The first step, the number at the very top, is revenue. This is your top line. It's literally every single dollar that came into your business from paying customers. For our food truck, that's the total cash from every single taco and burrito they sold. Simple as that. Now, from that big revenue number, the very first thing we subtract is something called cost of goods sold, or COGS. Now, this one is super important. It's the cost of the actual stuff you sold. For our food truck, this is not the gas for the truck or the ads you bought. It is only the meat, the cheese, the tortillas, the ingredients that physically went into the food that people bought. Okay, after you subtract COGS, you then subtract your operating expenses. You can think of these as the costs of just keeping the lights on. It's not the ingredients, it's everything else you need to just run the business day to day. We're talking salaries, marketing flyers, insurance, and yeah, the gas to drive the truck around town. And then, after all of that is subtracted out, the number you have left at the very, very bottom is your net income. This is it. This is the bottom line. It's the real, honest-to-goodness profit your business made. It's the money you can either put back into the business to grow it or, take home.
This one number is the ultimate proof of whether your business is working or not.
So, now let's go all the way back to our food truck. Armed with this new knowledge, we can finally answer that question about the ingredients. But this time, we can make a smart, data-driven decision instead of just going with our gut. Because now you can actually model the different outcomes. Look, if you use those high-quality ingredients, your cost of goods sold, your COGs, will be higher. That might mean you have a smaller profit, but hey, maybe it's steady. Now, what if you switch to cheaper ingredients? Your COGs goes down and your profit might jump in the short term. But here's the kicker. What happens if that lower quality means you start losing customers? Well, now your top-line revenue starts to shrink. See? By understanding these pieces, you can analyze the whole picture, not just the immediate cost. But look, knowing your numbers isn't just about one decision. It's about building a winning strategy for the long haul. It's about leveling up from just being the scorekeeper to becoming the team's master strategist. And this is really where the magic happens. A solid grip on your P&L isn't just for you. It's how you walk into a bank and prove you're a good bet for a loan. It's what you show investors to get them excited about your vision. It's how you track your own progress, month after month, to make the smart moves that lead to real, lasting growth. So, at the end of the day, learning all this stuff isn't just some boring exercise you have to get through. This knowledge is your superpower as a business owner. Truly understanding the financial story of your company puts you in the driver's seat. It gives you control. So here's the bottom line. Your business's numbers, they're more than just figures on a spreadsheet. They're telling you a story. It's the story of your hard work, your decisions, your vision. The numbers are your scoreboard. And now that you know how to read it, the only question left is, what game-winning strategy are you going to create?